Hey guys, what's going on? Kunal here. Guys, I want to talk to you about the #1 trading pattern that's actually working in this market. So you guys have probably noticed that there has been a massive shift in the markets of recent, not just yesterday's big monster candle after the FOMC, but we have seen a series of large distribution days in the market. The market is in a phase of light distribution where there has been consistent selling happening nonstop across the board for over a month. And you've seen that, #1, in the market leaders, right, like Apple and Microsoft, right, this last month, right, all breaking down and, right, topping out for a short period of time. And then we're also seeing it with more speculative names. But today I want to talk to you about what has been my favorite pattern in this market. It's been working like a charm. So my favorite pattern has been failed breakouts. And so one thing that we know about traders and day traders, right? We love breakout trading. We love breakout patterns, and everybody does them. And, you know, in a hot market, it's like fairly easy, right? You draw a little squiggly line and, you know, and it goes over and you're buying it. And because the market is so hot, it works. But in a distribution market, breakout patterns fail almost all the time. It's not like the market here, right, in June and July, where you get like this, right, these big pushes. Now when you see breakout, they're going to fail. And so we have been fading breakouts nonstop, and you've seen this over and over, right? Like IONQ, beautiful breakout pattern, right? And it pops up for a hot second and then rolls over, right? You know, we have like Rivian had a beautiful flag pattern. That's a great breakout pattern, you know, in a hot market, but the market started to roll over and we get these, right, subsequent rollovers. And you see this kind of over and over, right? Like coin had that epic news out and then boom, right? It's starting to roll over and break, you know, everything is fading out. So I want to talk to you about, you know, this pattern. So CVNA had a big rip on the 13th or 14th, and you had this like big candle day. It was actually up about 15–20% that day. And a lot of times when you see that, you get really excited. You're like, hey, this is going to be, right, this next hot pattern. It's been obviously a market runner of the last few months, but that only works in certain markets. And so this market, we want to be fading that, but not only do we want to fade it, we want to keep hammering it till it actually starts to break down, because usually it's going to be one of the ones that moves down the fastest. And so what you can see here is, you know, we've been trading this now for the last couple days, is once this breakout level started to fade off, then I want to start hammering this thing over and over. And so we started actually doing it yesterday, and you can see this is the telltale sign of when the breakouts are failing. So this is your trend line, right? CVNA had an upgrade this previous day on the 18th. It had an upgrade, and it spiked up from 50 to 54. So decent size move, almost 10%, right? People getting all giddy. Hey, a lot of shorts in this, short squeeze, short squeeze. No, short squeeze is for one specific type of market, and short squeezes really only work about 1 month out of the year for the most part. So this thing spikes up on the news because the people are coming in, and then look, you can start to see, right, it just goes and kerplunks. And so that's your telltale sign. Now the breakout has failed, right? And so what we want to be doing now subsequently is starting to fade this pattern on this strength. And so, you know, 2 days ago, you can see the stock actually goes red to green, and then, right, you get this huge, like, kind of spike down. And so now we know, like, this type of pattern is, right, just in full-blown heat. And so, you know, when I start seeing this type of action, what I want to start doing is just starting to hammer this thing over and over. And so, you know, what I start to do is, like, as this stock starts to spike down, right, we pop into the EMA and we get this just sideways consolidation. This is just your classic bear flag. You know, I want to take this thing down right at this level and put my stop over the 9 EMA. And so, you know, I ended up hitting this thing at, you know, 48.66, right? And then it was just off to the races, right? Cover half at 47.90, 47.40, cover the rest at 46.42 into this spike. And so just a quick right? Simple bear flag, something you can do, guys. The key to bear flag trading is when you get the spike down, you want that sideways movement. You want to let that 9 EMA come right up on top of it. And then you're just going to scale out really every 50 cents to $1 along the way. So now that we've done this, the next day I want to do it again because we've got 3 days in a row this has happened, right? So I want to keep doing it till it starts to break down, probably into the mid-30s. So the next day on the 20th, as soon as the market, right? As soon as the market opens, we're about half an hour into it, 48.44. So CVNA once again had a little piece of news out, and you can see right away, look, you get this spike up, and bam, right? It comes all the way back down. When you see wicks like that, you know that a stock is about to fail. So then you get this spike up. See these wicks? These are sellers' wicks. So when I see this wick, right, I'm coming in right off 48.44 as it's starting to sideways. Boom, it breaks under the VWAP. I'm taking this thing short, stop loss right at the top of the candle because this is a 30-cent risk for potentially, right? This is $5 worth of reward, right? The ATR is $5, and we're getting it pretty close near the top. Now, CVNA, especially at E-Turd, has bad margin requirements. Like they just don't let you really get that juicy in it. So what I always do is the puts on it. I just use the next strike price. So, you know, it's a 48. I did 47.50s, and you know I'm getting this thing. So you know, as I'm shorting at 48.40s, you know I got the puts around the 130s, 140. I average in a couple times as this thing is starting to go. And dude, now it's off to the races, right? So now it's off to the races. I got $1 plus some change average. I know I got probably about 5 points worth of movement. Dudes, like this is when you can get some really good shreds, right? Now it's just a matter of scaling out. And usually this can be an all-day hold. See, if I chase the spike down, like if there's a gap down, you probably are going to cover within the first hour or two. If you actually get a gap up and a spike up and you're hitting it, you're probably going to get a good all-day hold for the most part. And so, you know, I ended up taking some off at 47.75, 47.20s, 46.40s, 46.60s, and then, you know, end of day 44.30s as the market kept speeding down. And, you know, this was a very, very easy setup because, you know, I'm basically just scaling out every dollar, 50 cents or so. But, like, it never breaks back over the VWAP. And so you always want to kind of keep some of the lottos. I like to keep a quarter or an eighth. And, you know, as this thing started to really speed up, you know, I got out of 44.20, so I did leave a 44.30s. I did leave a little bit on the table. But, you know, dude, by the time it was done, I mean, these options contracts, right, were at 350. You know, I had a little bit more than a double on those last lottos. And you don't want to keep a bunch of lottos. Like if you do 50 contracts at, you know, I did 50 contracts, you know, you're coming in at, you know, 150, 130s average, right? You're kind of, you know, it's a little bit thin, so you got to kind of piece into it a little bit. So you could, you know, if you save just 10 contracts at 1,000 shares, like you're going to have yourself some nice cheddar as it goes into this. And so normally this price of a stock, I would just do the shares on it. But CVNA, like UPST, Affirm, there's a couple on E-Trade where they just don't give good margin on it. And so you got to do, you know, you got to come in with the put. So, guys, hopefully that helps. This failed breakout strategy has been working quite a bit. I anticipate as long as the market is still doing what it's going to do, that, you know, you want to, when you see these type of patterns, start fading them off. Failed moves are fast moves. So, guys, hopefully that helps. Let me know if you have any questions. Take care.